Turns out Dropbox's 2012 data breach was bigger than previously known. Vice's Motherboard website reports the hack impacted more than 69 million accounts. The cloud storage company says it reset the passwords of all affected users last week. This incident, just the latest example of a company resetting only passwords for those accounts known to be compromised, while leaving all others unchanged. Staying with cybersecurity, investors pulling back from Palo Alto Networks. Shares fell over 7% in Wednesday trading. The company released better than expected earnings after the bell on Tuesday, but its outlook for next year is not as rosy. Product sales are expected to decelerate to 12 to 13% in fiscal 2017 as the sales mix shifts from products to subscriptions. Mark McLaughlin, CEO of Palo Alto Networks, joins me now here in the studio. So you guys are the #3 player in enterprise security software, behind Cisco and just slightly behind Check Point. So almost neck and neck for #2. Yeah. How do you expect this product versus subscription mix to change?
Well, we've been telling people that there's a transition in security that we've actually invented, have been driving for some time, which is a move into more subscription services than hardware over time. That has been the case for a while. It's picking up steam and accelerating. That's very good for our business, and it's higher operating margins, it's high free cash flow, it's more profitable business over time, and it makes us stickier with customers. So we like that change, and we're driving it. The expectations of the product side were what we talked about next year were a little lower than what the Wall Street was predicting. The services are higher, right? So in the mix of things, we came out and said we'd be in high growth mode, meaning 30+% revenue growth at billion plus scale for the next years to come. So we iterated a very high growth mode.
As you said, you are still a growth company. So why do a buyback now? Why not use that money on M&A to buy some of these smaller cybersecurity companies? There are so many of them out there.
Sure. Well, as I said, the industry's in transition, and the mix shifted as well inside of there. So this is an opportunistic thing, possibly. We look at that and say we've got a lot of conviction in the business. We know that there's some anxiety over how the model works out, and the shift occurs over time. So it's an opportunistic thing for us to be able to buy shares. We have fantastic free cash flow generation, about $1.9 billion in cash, 42+% free cash flow generation. So we have plenty of cash to invest in the business, action any M&A that we would want, and return capital to shareholders opportunistically if we saw that.
Are you interested in M&A, and if so, what kind?
You know, we have a platform. We mean that in a sense of everything that we've done works in a highly automated fashion natively together. Over 11 years' time, we've built almost everything, and that's why it works so well together in a real platform. We have gone to market few times, 3 times in 11 years for small transactions. So that's our main motion, to have a true platform. We really feel like you have to build a lot of it yourself. It doesn't mean we wouldn't go to market for things over time, but that's not been our history. Now,
curious what you think about some of these smaller companies. I recently spoke to the CEO of Tanium, Orion Hindawi. He has some pretty strong feelings about what's going to happen in the market. Take a listen to what he had to say.
Sure.
I think that there are a lot of companies that don't deserve to exist, and I think that they are going to shake out. You know, I think in aggregate, we may not be in a bubble, because there are going to be some companies, and we hope to be one of them, that will break out and become $20 or $30 billion companies in the next few years. But the flip side is a lot of the companies being funded today really don't have anything worth funding.
He describes a coming decimation of the cybersecurity market. Do you see that?
You know, I think as a lot of industries, there's cycles of investment. If things are growing very quickly, there's tons of investment. Lots of companies get funded, and over time that shakes itself out. I think what Orion's really talking about there is the age of the platforms. And what that means is things that used to be purchased on standalone basis, and companies having lots of capabilities from dozens of vendors, that's definitely going away. And companies want real platforms, and they want them from less vendors, better security, better value. And on that point, I completely agree with Orion. I think that the market will move in that direction. We definitely see it already in the industry, and you can see that in our growth.
But it really hasn't happened yet. I mean, when does this really come to fruition?
I think it is occurring. I think if you look at lots of the small technology companies out there in security, from a funding perspective, it's very difficult to get funded right now. We haven't seen lots of people going public lately on this, right? So I think this is already playing itself out over time.
Now, we've heard a lot about this hack on the DNC, but we haven't heard a lot about as many businesses being hacked. I don't know if that's because it's not happening as often, but how do you see the overall spending in this market?
Spending is healthy, and I expect that to continue to be the case. There's a lot of attacks going on. I think they're getting less press, and there might just be some media exhaustion on this issue over time. But I can assure you that there's lots and lots of attacks occurring.
So what is your take on this DNC hack?
It's just another example of you should be very careful to make sure you're using the most advanced technology, educating people. Back to the password thing you just mentioned a little while ago. It's really going to take a combination of technology and education and process to get things as best as they can be.
There's a strong belief that this particular hack originated in Russia, maybe even tied to the Russian government. Do you foresee more attacks of that nature, more state-sponsored acts, and specifically against the U.S. government?
Attacks come in a lot of different flavors and a lot of different motivations. I think one that gets a lot of attention naturally is state-sponsored attacks. They think they're also the smallest number of attacks out there. By far the broadest swath are criminals. They're actually trying to steal money and information that they can monetize. So there's a huge amount of attacks. Most of them are in that category. The state-sponsored one gets a lot of airtime because it's it's political in nature and it's geopolitical in nature, right? And I would expect those to continue as well.
All right, Mark McLaughlin, CEO of Palo Alto Networks. Great to have you back here on the show.
Thanks for having me.
Stopping by. Coming up, new unicorns have been few and far between this year, but real estate startup Compass just joined the club. We'll catch up with the CEO next. This is Bloomberg. Unicorns have become nearly extinct, or certainly more rare in 2016. Just think back to the third quarter last year when 25 venture-backed unicorns were created. Third quarter of 2016, only 6 of those venture-backed startups crossing the billion-dollar threshold, according to CB Insights. New York-based real estate startup Compass just became the 6th after a $75 million round led by mutual fund operator Wellington Management. Compass CEO Robert Refkin joins us now from New York, and I also want to bring in someone who knows the VC environment very well, Phil Libin, co-founder of Evernote and General Catalyst Managing Director. Thank you guys both so much for joining us. Robert, though, I'll start with you. What was your experience as you were fundraising? And, obviously I know that your revenue numbers are strong, but how was this fundraise different from before?
Yeah, I think what we found is that this time people were more focused on profitability than they had been in the past. And this is a $75 billion broker commission market that we play in, and we're already profitable in several of our offices. I think they found that very compelling.
Talk to me a little bit about your business in particular. I know you can buy, sell, rent properties via your site, but what is the edge when it comes to technology?
Yeah, so Compass is a technology-powered real estate brokerage platform. and we combine experienced agents with innovative technologies. And so what makes us different is we do everything that the aggregators do, but we combine them with the best-in-class agents across all the markets we play in. We're in 24 offices nationwide, and we intend to expand further later this year.
Now, Phil, you've got a mutual fund operator participating in this round. How is the sort of influx of non-traditional investors changing the overall VC environment?
I think there's great opportunity for investors of all kinds, and I really like what Compass is doing because they're adding a lot more data and information to a process that traditionally has been fairly closed loop and kind of slimy. And I think lots of people want to invest in something that takes an important but slimy industry and makes it virtuous.
Are you taking the slime out of real estate, Robert?
Well, look, my mom's a real estate agent, so my roots are grounded in the business. Full disclosure, she even works at Compass. But like, I think like every industry, there are great actors and there are less so. You know, we're focused on hiring the best agents and giving them the most wonderful experience possible. Think about drivers. There are great drivers, and there are drivers that aren't so great. Uber's done a really nice job of hiring great drivers, empowering them to have a better experience so they can be better with their clients.
Phil, do you see unicorns becoming even more rare than they are right now? Over the next year or 2 years, will that trend let up?
Yeah, I don't think most people...
I realize it's a sort of an artificial designation. It's a company with $1 billion valuation, but it's become a sort of rite of passage and a seal of some sort of success.
I think there's going to be more. I think maybe we had a slightly artificially too high number over the past year or so, but I think in general, if you ask about are there going to be more companies worth $1 billion or more or fewer companies, of course there's going to be more. The opportunities for new technology are tremendous. There's going to be lots of new ones. Maybe we're at a temporary lull, but I think the market overall over the next few years is extremely strong.
So, Robert, how do you intend to invest the money that you've raised here and get to the next step?
Well, the first thing we're going to do is we're going to come to you. We're going to San Francisco. We'll be launching there very, very shortly, and then we plan to expand further. Also, we are going to continue to invest in R&D into the technology team and to build the best-in-class brokerage platform in the country.
So, Robert, was the swirl around this $1 billion number helpful or hurtful to you in your fundraising efforts? I imagine it'd be kind of a double-edged sword.
Yeah, so we don't talk about valuation, and I don't really focus on valuation. I really focus on providing the best experience for the team in the company, the 300 people that I'm really proud of who have built it, and the 900 collaborative agents that are working to build the best experience in real estate, for the end consumer.
Phil, you tell me why a $1 billion valuation can be a double-edged sword, as someone on the other side of the process.
Ultimately, I think all real companies are trying to build a business, not trying to focus on an arbitrary milestone like that. And when you have a milestone, it sets all sorts of expectations. It maybe confuses employees. It sends mixed signals to investors. So I think it's a great accomplishment to be able to raise money from really high-end investors at $1 billion. But ultimately, it's important not to let that get to your head.
Do you recommend companies not raise money at a valuation that high if they can avoid it for for a late-stage round before they get to that next step? I
think the most important thing is to pick the right investors. You pick the investors first, the people you really want to work with, and then the valuation is like one of the least important factors in a fundraise.
All right. Phil Libin, co-founder of Evernote and now at General Catalyst. Robert Refkin, CEO of Compass, fresh off a big raise. Robert, thank you so much for joining us. Phil, you are sticking with me.
Thank you.
Coming up, some call it a silent revolution. Could the adoption of digital healthcare really disrupt the U.S. economy? We'll talk to a veteran healthcare investor next. And if you like Bloomberg News, check us out on the radio. You can now listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg West. Let's begin with a check of your first word news. UK Prime Minister Theresa May's cabinet has concluded there's no need to hold a parliamentary vote before starting the formal process of pulling Britain out of the European Union. The move risks alienating opposition parties. They believe lawmakers should cast votes before the Prime Minister triggers Article 50 of the EU's Lisbon Treaty. A majority of Spanish lawmakers today rejected acting Prime Minister Mariano Rajoy's attempt to form a government. Rajoy is trying to piece together the first administration since Spain's traditional two-party system broke down in December. He has a second chance on Friday when he needs only a simple majority of votes cast. The Obama administration has picked 7 people to serve on a financial control board to oversee restructuring of Puerto Rico's $70 billion debt. On July 1st, Puerto Rico defaulted on nearly $1 billion. The National Hurricane Center says Tropical Storm Hermine is gaining strength as it heads to Florida's Gulf Coast. The center says Hermine is on track to approach the northwest coast of Florida by Thursday afternoon. I'm Mark Crumpton in New York. It's just after 6:30 p.m. Wednesday here in the city, 8:30 Thursday morning in Sydney, where my colleague Paul Allen joins us with a look at the markets. Paul, good morning.
Good morning, Mark. Well, it's looking like a down day in this part of the world for Thursday. If we take a look at New Zealand, been trading for 30 minutes so far and it's already off 0.2%. Nikkei futures are also showing weakness and we're expecting declines on the ASX of 0.4% at the open here in Australia. One potential bright spot here could be retail sales. Got a couple of stocks for you to look at. Retailers in Australia, Harvey Norman and JB Hi-Fi. Electronics and homewares were the standouts of the earnings season, which has just concluded here, and we're expecting retail sales for July to have improved in Australia by 0.3%, a big jump over June, and that is surprising considering the rather mixed employment picture here and the fact that the election was recently held. That's normally not so good for retail sales. Also out of Australia today, private capex for the second quarter, that's expected to show improvement as well, to a decline of 4%, an improvement of the decline of 5.2% that we saw in the first quarter. Perhaps not so encouraging is the China data we're expecting today. Both manufacturing and non-manufacturing PMI are being released for August. Manufacturing PMI expected to tighten to 49.8. Also Taishin PMI, the private gauge, that's expected to tighten as well to 50.1, but at least staying in positive territory. I'm Paul Allen for Bloomberg TV in Sydney, Australia.
This is Bloomberg West. I'm Emily Chang. It is time now for Series A, our weekly deep dive into tech investing. I'm joined by a veteran healthcare investor in the space, Stephen Krause of Bessemer Venture Partners, who heads up the firm's healthcare investing. Steve, thank you so much for joining us.
Thanks for having me.
We're going to get into a deeper discussion about the future of healthcare, tech investing, biotech investing, but I do want to talk to you a little bit about Theranos first. Theranos, the blood testing startup, has withdrawn its application for emergency clearance of a diagnostic blood test for the Zika virus after regulators found problems with the way Theranos was gathering patient data. This news comes after U.S. regulators sanctioned Theranos for failing to run its laboratories up to standard. What are your thoughts on Theranos? I mean, you have been investing in this space for a lot longer than some newer investors, and I wonder if you've seen anything like this.
Frankly, Emily, it's amazing. And for someone who cares deeply about putting products and services in the hands of patients and doctors, it's pretty maddening. I think anyone who's serious about, as a healthcare investor and entrepreneur, enough is enough. The company has had to pull back test results. Their CEO has been banned from operating a lab. They've had partners leave them. Now this Zika result proves to be they didn't operate the clinical trial well. It's just frustrating, and frankly, it overshadows a lot of the great work that's happening in healthcare.
Did she pitch to you?
She did not. In fact, if you talk to most healthcare investors, she really didn't pitch to anyone who had real deep healthcare experience. It's a conundrum because it's such a complex industry where you'd think you'd want folks who have healthcare experience and knowledge and contacts on your board and as investors. So I hope we can talk about a lot of other great promising companies. It's very frustrating. And I think it proves that if you try to put valuations and profits ahead of patients in healthcare, you're going to be burnt. And
right.
Theranos was burnt.
So let's talk about where you see potential, because there are a lot of newer investors, as I said, getting into this space. But you've been doing this for a long time.
Yep. Yeah. I think it's a great time in healthcare. You know, this is an industry that for too long has been pretty archaic. It's frankly way behind other modern industries in terms of technology. I think we're kind of in the 1990s of enterprise software in healthcare. You know, it's pretty amazing. Only 5 years ago, 50% of doctors didn't use software to capture your record, your clinical information. That's shocking.
Pretty sure my doctor still writes on a notepad.
Well, that's a problem, and that's changing, and that creates massive opportunity. You like her, but your data is nowhere, right? And that's a problem, right? If you want to manage your health, if you want to manage a population's health, and you don't have that data in fundamental databases so that you can do analysis on it, you know, you can't really, change healthcare for the better. You can't lower costs. You can't improve quality. So literally, that's where we're sitting today. 5 years later, you've got 100% doctors using digital health records, and now you can do things that are happening in other industries like complex data analytics on top of it, and that can really improve the quality of care and the cost of care.
So where do you see the most potential for disruption?
I think it's the analytical layer now on top of these electronic health records. You have companies like Flatiron or Catalyst Health that have raised attractive rounds. I think those are promising companies. I think consumerization of health. You know, there are many things that are happening in the healthcare ecosystem now. You see the rise of individual exchanges. You see individuals having to pay, $1,000 or more. 10 years ago, only 10% of patients had to pay $1,000 of deductible. Now it's 50%. So individuals are bearing a lot of cost of the healthcare system, and they want to be involved in that decision making. And they also expect that from on-demand experiences like you have with Uber. They want that in healthcare. So I think consumerism in healthcare is a really interesting place to invest in terms of apps and software that can help consumers make decisions.
Apple bought a company called Glimpse last week in this area.
Yeah, totally.
Apple has barely scratched the surface, it seems, here. Do you think they can become a big player here?
I think Apple is making the moves, right? You hear about ResearchKit and HealthKit. And I think Glimpse is really interesting. This concept of a personal health record. I mean, we all should want to own our health data. We should want to know, about our health data. But the idea of a personal health record has been around for almost a decade and hasn't taken form. Glimpse is a personal health record, and I think Apple has sort of the interface and the dominant market share with their devices, where maybe the integration with that personal health record can actually make it a reality for patients and get them involved in their care. I think it's a really interesting foray into healthcare for them.
So how do you see the exit environment for biotech and health tech companies, and compare it to consumer tech and enterprise tech, because that's what we often focus on. Yet Apple here has made an acquisition. IBM has been very acquisitive. What is the environment like right now?
It's really healthy.
These companies also require a lot of money, a lot of capital.
They do require, especially on the biotech side, they require a lot of capital. I think when you think about biotech and healthcare IT, they're very different. So in healthcare IT, I think those look a lot like consumer technology companies. They're innovative technologies that gain scale in the marketplace, and then companies like IBM and Google and Salesforce and Apple will come in and acquire them. I think they all have to have exposure to the largest sector of our economy, right? It's an economic exposure play for them, and so I think all the large software companies will make those acquisitions. $40 billion has been spent year to date on acquisitions of healthcare IT. In pharmaceuticals, it's different. Those are earlier stage, they're moonshots, right? But large pharma companies have basically outsourced their research and development to biotech companies these days, and so they're making those acquisitions as well.
Quickly, a company that you invested in called Ovascience, I think is so fascinating and exemplifies sort of what you do, because they went public very fast. They are focusing on reproductive technology where there hasn't been a lot of innovation.
That's correct.
So talk to me about making a bet on a company like this where there's so much potential yet a lot is unproven.
Yeah, I mean, having a child is one of the most important things that people can do, humans can do, right? And Ovascience was trying to help couples who faced infertility, give them technology that gives them hope to have a child.
Explain the technology.
The technology was basically a finding that it reversed scientific dogma that was known for centuries, that women are born with a certain number of eggs in their ovarian pool, and that depletes over time. That actually turns out may not be true. The Ovascience founder discovered that, and that women have stem cell-like properties in their ovarian pool, so these eggs can replicate and refurbish. And so women then, you can harness that technology, that power, to help women become fertile and to have a child. I think I can't imagine of a greater company to invest in. The CEO, founder there, Michelle Dipp, was awesome. It was the perfect combination of what we do as venture capitalists, invest in a huge dream that changed people's lives with a great founder CEO, and not surprising that company went public. I mean, how could you not want to invest that as a private investor, as a public investor? If they're right, it's a huge multi-billion-dollar opportunity.
What's your take on this Mylan EpiPen controversy?
You know, another
Slash
example,
outrage.
right, outrage. Unfortunate time with kids going back to school. I think it's actually good that attention has been placed on it. You know, the companies had to react. Their stock price has taken a hit. It's good when the markets, you know, have morals to them too. And I think it's a debate that we have to have in society about how we deal with innovative pharmaceutical companies like an Oviscience and how you regulate and price and allow exclusivity for those companies versus a sort of Me Too, you know, company like Mylan, which is simply marketing a generic. Those companies shouldn't be regulated the same, right? Oviscience should have a much greater market exclusivity than a Mylan should, and they should have much greater pricing power if their product proves to be true.
Trump versus Clinton on health care. Who's better?
Clinton, because she'll provide stability to the markets, and stability of the markets in healthcare are important because you're making long-term bets in public policy involvement in healthcare. So I think Clinton.
Last question. StemCentrx, it was a recent biotech deal that had a huge acquisition, AbbVie, for $10.2 billion. This is a deal that a lot of traditional VCs missed, or they weren't in this company. How did that happen? How do you make sure you get the next one?
Well, we're always trying to make sure we get the next one. It happens. We miss some from time to time. We have a
But it wasn't just you. I
no,
mean,
it wasn't.
A lot of the big biotech missed it.
Yeah. Listen, I think it's a really interesting area, stem cell technology. It's very early. Again, it's a moonshot. If it works, it'll prove to be a good acquisition. If it doesn't, it might be zero. We miss some, we get some. Luckily, we get a lot of them.
So fascinating. It could be zero, yet they're paying $10 billion for it.
Yeah, it could, because if it works, imagine it could also be, you know, Mylan, for instance, which is not a very innovative company, produces $1.8 billion in EBITDA each year. I mean, these are highly profitable companies when
they work.
Develop a drug and they work. They're multi-billion-billion-dollar franchises.
Wow.
So.
All right. Steve Krause, Bessemer Venture Partners, thank you so much.
Thanks for having me.
Fascinating discussion. I appreciate you stopping by. All right, Twitter shares jumping the most in 2 weeks after co-founder Ev Williams told us the company has to weigh all options amid speculation it is a takeover target. We're talking about the tech M&A market next with Phil Libin. This is Bloomberg. A stock we are watching, Twitter shares jumping the most in 2 weeks today after our interview with co-founder Ev Williams. We talked to him about the fact that the stock has sunk about 30% over the last 3 years, and takeover rumors are constantly swirling around the company. So I asked Ev about his faith in current CEO Jack Dorsey. Take a listen.
My faith is high in Jack. I fully supported Jack's.
And do you see, and look, I know, you can only go so far, but we've seen a lot of M&A. Do you see Twitter remaining an independent company?
No comment on that. I mean, we're in a strong position right now, I think, and as a board member, we have to consider the right options.
Our guest host, Evernote co-founder and General Catalyst Managing Director Phil Libin, still with me. So, how much did he really say there?
I think it's the same answer that everyone's given on this question, but it was good to hear him say it as well.
So what do you make of it?
Well, I think it's true. I think it's a company that needs to consider all options. I personally have less at stake at Twitter, and I think they are fairly likely to be a good acquisition target.
By who?
I think anyone looking to become kind of reach a younger audience from a traditional media company, all of the normal players that you would expect, Microsoft, Google may take another shot at it. So it's possible. I mean, I think it's still a strong and important brand, although it's down from kind of its highs from a year or two ago.
Do you sort of feel his pain at all? Like, I feel like Evernote was a company everybody always talked about Evernote getting bought.
Mm-hmm. Everyone still does. Standard.
So what is that like?
I think as running the company, you have a duty to the investors, to the employees, to the customers. You always want to look at what the best options. I think Twitter is already a public company. They've already done that. They've already accomplished that. That doesn't mean that they have to stay public forever. I think an acquisition is a perfectly good outcome for them and for just about anyone else.
But how do you handle the naysayers?
Boy, if you start paying attention to naysayers, it's being a CEO is just not a good idea.
So Bill Gurley said at one point, winter is coming. Mike Moritz said companies were the flimsiest of edifices. There's this big crash everyone has been predicting, but it hasn't really happened. I mean, Washio shut down today. The dry cleaning.
I think they still have my.
No, I was devastated about that. But do you think a fallout is still coming?
I don't think it's going to be as dramatic as people think. I think there will be an adjustment that's already started. Companies have already tightened their belt. Some companies have folded. Some companies have just become a little bit more sensible. I think this is a normal part of the cycle. We are at the end of the current high growth cycle and near the beginning of the next one. So we're kind of in that slow period. A year from now, I think things are going to be very fast again. And for the next year or so, we'll be in a
So
slow
what
period.
kind of companies do you think will get acquired?
I think there's a lot of big companies that just have a lot of cash right now. Also, interest rates are kind of seemingly almost permanently low, so there's not much else to do with money. So basically anything that has traction and a really solid team in areas that are going to be very important is likely to be acquired. So anything that's in AI, boy, that's a topic that everyone is interested in. Anything that's in autonomy, VR, new generation of enterprise software. There's a ton of large enterprise companies with a ton of cash and not much innovation. I think this is going to be a very good acquisition market.
So part of the reason you agreed to go to General Catalyst as a VC is because they told you could start something again if you wanted to.
Yep.
Tell me about that. What are you working on and what are you investing in?
So I am focused on bots and AI. I think this is a super important part of the next 5 years. This idea that we'll be able to interact with technology in a way that's much more similar to how we interact with people. I've made 5 investments so far. So I've invested in a few small companies. I've started a couple of small companies that were hatching. So it's kind of a combination of incubating and investing. I'm having a fantastic time. The General Catalyst team is just a really strong team of people. And so I selected which VC to join kind of in the same way that I would select VCs as an entrepreneur. It's 90% chemistry.
All right. Phil Libin, you're sticking with me through the next block, co-founder of Evernote, General Catalyst Managing Director. We'll be right back. Coming up, Tencent gets a $500 million headquarters complete with holographic tour guides and facial recognition software. We'll check in with our Asia tech team for more details next. This is Bloomberg. Tencent is shelling out the big bucks for its new headquarters in southern China. The $599 million skyscraper will double as a lab for developing and testing internet-connected devices, next-generation smart devices, holographic tour guides, and badges that can track employees will all be built into the infrastructure. Bloomberg's Lulu Chen sat down with Ivan Wan, Tencent's chief architect. Take a listen.
All these devices are based on the concept of Internet of Things. We've inserted QQ's SDK into all of the hardware devices, so our QQ Internet of Things. Then all of these devices are connected to the cloud, and then we build a platform on top to connect it with QQ and WeChat. In other words, all of the devices in our building have Tencent's DNA because it includes QQ and WeChat's SDK.
Joining us now, Bloomberg's Peter Elstrom, our Asia tech editor in Tokyo, as well as my mini co-host, Phil Libin from Evernote and General Catalyst. So, Peter, there are parking spot alerts. They'll send you an alert when you pull in about where the best parking spots are. There's conference rooms that will adjust temperature when you walk in. Talk to me about the inspiration here. I know it's more of a campus style. Is that common in China? Because it's very common for, Apple, Google, Facebook. They all have sort of campus-style headquarters.
Well, it's unusual for this part of China. Shenzhen was one of the original special economic zones in China. It's better known for its manufacturing prowess, really, than its technology companies. But Tencent is trying to make a statement here. They were trying to create some kind of vertical campus-like atmosphere, even though it's a pretty urban setting there. So within the bridges that connect the two towers that you see at the Tencent headquarters, there are running tracks, there's going to be a swimming pool and a climbing wall. So the idea is to create this kind of campus atmosphere where employees can interact with each other, which is pretty common for Silicon Valley also. And then on top of it, as you say, it really is a test lab for new technologies, particularly the Internet of Things. As you're driving towards the building, you'll have sensors in your car that will tell you where the best parking spots are. They'll be able to track you not just when you come into the building, but which room you are in the building. So there's a lot of technology that they're trying to apply. There are also some energy implications. You're going to get real-time reads on how much energy the building is using, and they're trying to use the heat generated from their computing systems to heat the swimming pool, among other things.
Every time I go to China, it kind of feels like I'm in the future. It's amazing how different everything is over there, both kind of in good ways and bad. What do you think is going to transfer over to maybe something we'll see in the U.S.?
Well, I think, the architecture firm that they picked is an American architecture firm that has done work for Google, for Amazon, also for Samsung, among others. So I think some of these ideas will be picked up. It depends on how well they work. They're closely integrated with a couple of the instant messaging services referred to in the video clip. WeChat, of course, is very, very popular. It's something that you could expect to find on every employee's phones and many other people's phones, too, as well as QQ. So if some of those messaging services take off and get more sophisticated capabilities, then you could see some of these technology experiments come to the U.S. and other markets.
Some of these technologies have some privacy implications for users. Do you think it's easier in China for employees to deal with an amount of tracking that maybe people in the U.S. would be less willing to subject themselves to?
That's a good question. WeChat certainly offers much more than you would expect from some of the standard messaging apps in the U.S. There are payment systems built into it. There's social networking. There's all sorts of additional things, and they're certainly using that data for a whole bunch of purposes, including advertising. So I don't know. Those are big questions as you see Facebook, for example, try to develop additional capabilities with WhatsApp and their messaging services. You may see them delve into some of these data use areas too.
All right. Peter Elstrom, our Asia tech editor, on new headquarters for one of the reigning tech giants in China. Peter, thanks so much. Phil Libin, my co-host, my mini co-host of General Catalyst and founder of Evernote, thanks so much for joining us today.
Thank you.
A story we are watching. Samsung unveiled new smartwatches at a trade show in Berlin today. The Gear S3 Classic will support its platform for contactless payments called Samsung Pay. The Gear S3 Frontier does that too, but also allows users to make phone calls or even book an Uber without the need of a smartphone to be connected. Samsung said it sees smartwatches continuing to be the fastest growing segment of the wearables market this year and will double next year. And we will pick up on this tomorrow with Samsung Electronics Vice President Rory O'Neill. Do not miss that conversation, 8:30 a.m. New York time on Bloomberg Go. And that does it for this edition of Bloomberg West. That is all for now from San Francisco. This is Bloomberg.